What's up, everybody? Welcome to another Monday night. Tonight, oh, sorry, I am going to be your host and the guest speaker. I wanted to take today, we do a lot of these calls. We have guests on the calls, and there's not a lot of opportunities to really for me to connect with you guys individually. So, I want to set that as an intention today, that there's some engagements and some uh back and forth, activity that happens on this call. I'm really excited. I see a lot of people on this call that are familiar faces, and I also see a lot of new faces. That means my Instagram or my LinkedIn or whatever, it's bringing in new people. And I understand that a lot of people, it takes a lot to join just a random Zoom call online, right? So definitely, give yourselves props for being here, give yourself some acknowledgments, because you could be anywhere else, but you're here. So just a little bit about myself. My name is Alex, and I have been in been in real estate for about 18 years now, ever since I picked up Rich Dad Poor Dad. And I've done everything in the residential space. Okay. Whatever you can think about, whatever you can do from the single family side, lease options, building of a property, all of it. I've done it all. Short-term rentals, vacation rentals, midterm rentals, any strategy from the residential side I've done. I've done the Burr method. I've done house hacking. I bought a triplex, lived in one, the other two paid. So I've done all these things. And it wasn't until about 2 years ago that I really learned how to do multifamily. And I'll tell you guys, and I'll share on this call the distinction of both of those things, of both of the real estate investments, and how they're similar and how they are different. But I didn't really learn it until about 2 Decembers ago. So it hasn't been a long time, and I've accomplished a lot in that short amount of time. And I'll also talk about that as well. 1 second. Sorry, somebody knocked on my door. So first, and also I apologize for me looking so yellow on this as well. Usually I have really good lighting, I'm in a great studio, but tonight I am in a hotel room. I don't have a mic. I only have these yellow lights in front of me. So completely just look really yellow. So I apologize for the way this looks. So for real estate, okay, I want to really just invite anybody with any questions about investing in real estate. You can ask questions like, what's the difference between investing in stocks versus real estate? Any question you have about real estate, I feel pretty confident that I can answer it well. Okay, so raise your hand. There's a reaction button at the bottom of your screen. You can click on that and you can hit raise hand. So I want this call to be more interactive today. And let's see where it goes. All right, so go ahead, Nick. You're first. You can unmute yourself, Nick. Oops. There you go.
Can you hear me?
Yeah, got you loud and clear.
Okay, Alex. All right, man. Yeah. So what do you think? It seems to me like a lot of investors are going to get pretty beat up here with the floating rates. The cash flows are disappearing.
Mm-hmm.
So what I'm trying to do is I'm trying to get, fixed rates. I was wondering, it seems to be very difficult to find, fixed rate in the multifamily. I'm pretty new to this, so I was wondering if you have any recommendations or suggestions.
Yeah. Cool. So let me first just explain to people that are newer. There are two different types of loans that you can get. One is fixed. Okay, usually fixed debt is about it's anywhere between 5 to 10 years. And it comes from, you would want to get it from an agency lender, which is either Freddie Mae or Freddie Mac or Fannie Mae or Freddie Mac, or like a life insurance company, something that's big that they give you a fixed rate for 5 years, 10 years, whatever it be. And then there's the adjustable ones, which usually are much shorter term. And you would only pick those types of that type of debt, that type of loan, when you're looking for something short term, when you're looking to renovate a property, or if you're looking to build. Anybody that is building, renovating, something that they're going to inject cash into and want to exit early, they're going to want to get bridge debt, adjustable financing. Okay, because when you get a long-term fixed debt, they
Yeah.
also penalize you for prepaying there's a prepayment penalty for paying it off early. Okay, and it's big. So some people will opt to go for bridge. Now what
Are
niggas,
they're only going 10 years? They only go up to 10 years on the fixed debt for multifamily.
yeah. So
Wow.
10 years is a long time. I mean, they actually do, they have bigger ones. They have like HUD loans that are like 50 years. So there's other ones, but those are very, very annoying to get, and they have a lot of restrictions with what you can do. Like you can't distribute cash for, only twice a year or something like that. So they have
Yeah.
a lot.
You're saying Fannie and Freddie, or maybe like a life insurance is maybe somewhere to look for that.
Yeah. Yeah. So you want to work with a agency broker. So Arbor is a great company that we work with. I like them. The guy that
Mhm.
I was introduced to, this guy Derek, he was on one of our calls. Just
Yeah.
really knowledgeable, really patient, and taught me a lot. So uh it's not so for anybody that's new, still trying to understand what the question is people have picked up a lot of agency debt. I mean, not agency, short-term bridge debt in the last 2 years because the market was so good. The interest rates were so low. Now, logically, okay, and most of our deals are actually locked in even during that time. Logically, you want fixed long-term debt. If you're going to get 3% on a deal, don't you want to have that 3% for as long as you can? Now,
Oh
because,
yeah.
yeah, but because for the last 10, 12 years, everybody was making money in real estate. You can almost do anything and make money because it just kept going up. So
Yeah.
kind of got a little bit lazy, just in general, as a collective group, everybody. So we wanted to make even faster returns for our investors. And this is where a lot of people ran into trouble, whereas our projections was that we're going to get a short-term debt for 3 years, and it's at a 3 or 4% adjustable rate. Now, the underwriting obviously should be a little more conservative, and people underwrote it with 2 points higher. So let's say the interest rates go up to 6 or 7. Okay, the deal still looks good and it makes sense. But interest rates literally went up to like for those debt deals like 9, 10%. Now all the cash flow is taken up from paying interest. And then the banks are saying, well, now your loan looks a little bit risky. So we're going to want you to put more money in the bank as a reserve, more money pulled out from your deal that was a projected distribution for your investors. So you can see how people are getting into trouble. There are people that
Oh
are,
yeah.
yeah, people that are going into the red, right? Like operating negatively every month. How long can they go on for? I don't know. It depends on how much reserves they have. And then also, people are doing refis. They're just like, now they're like, oh my God, it's crazy. Let me lock it in now. Okay, because they don't know what's going to happen. The Fed keeps saying they're going to do more, increase more, but who knows what's going to happen, but locked it in. And there's people doing a cash in refi. That means they're writing a check to the bank to refi it and lock the rate in. So there are people doing that right now. Everybody's trying to save the deals that are doing that, right? So how can we, prevent, what can we learn from it is the most important thing.
Yeah,
When,
get fixed
yeah,
debt, right? Try to get as long as fixed debt as you can. It seems like.
yeah, I mean, just so that is one way, look at real estate long term. Okay, you always want to look at real estate long term, as tempting as it is when the market is good and everybody's making double their money in 1 year, rents are going crazy. You got to
Mhm.
be disciplined to look at real estate deals long term, 10 years. Like, I'm not rushing to get my money out so I can entice investors to invest into this deal. People always get into trouble when they look at deals in real estate in the short term. If you're trying to flip houses, I have one of our mentees is flipping houses in San Antonio, and it went south. Like, whenever you're trying to flip and do things quickly in real estate, that's where all the risk is. This is when people say real estate is risky, that you can lose money. It's because you're looking at it from, how much money can I make in 1 year, 2 years, even 3 years? But you want to look at all deals on a 10-year period,
Mhm.
5 years minimum, you know?
Now, does that 10-year, you said the 5 to 10 year with the Freddie and Fannie, you're giving me one of your possible examples. Does that one how does that reset after 10 years? Is that
So
how that
you,
works?
well, usually they'll give you like 1 or 2 year option, or
Mhm.
they can reassess based on the, the debt market.
Mhm.
But you would refinance during that time or you would sell, right? So
Okay.
it moves. The properties will move and you're gonna have to refi at some point. So hopefully your plan is that by the end of it, we would have already raised enough rents or lowered enough expenses that the refi, even if the interest rates was higher, you would still be cashing out money. Right?
Mhm.
I've had multiple deals in the single family residential side that I've cashed out the entire investment multiple times. And that's
Mhm.
like a 7 year period. So you got to be patient with real estate. There will be points, if you look at it in a 10-year span, there will be points during that 10 years where it's going to be really, really awesome to do a refi.
Mhm.
You don't want to be forced into a refinance or forced into a sale when the market is not good. That's why, all the big players, and Grant Cardone says, if anybody is selling anything right now, they are distressed. Okay, they're
Yeah.
distressed.
Oh
Anybody.
yeah.
So this is the time also to learn. All the big syndicators that we know, okay, like Brad Sumrock, uh, Rod Cleef, Robert Martinez, all these guys are thousands of units. You know how they made it? They made it really on the coming out of that 2007, 2008 crash.
Yeah.
They started to buy these apartments during that time.
They
I
bought
mean,
at the lows.
yeah, I mean, it's the lows, but it's also just that they still took action, and a lot of people are afraid to take action right now. Don't let this market pass you by. And when I say take action, I mean like just learning, because there will be a deal that's going to show up in front of you if you learn. If you learn, it becomes a part, it starts to show up in your mind. You think about it, and then you will see it. It's not like opportunities are not there. We just don't see it because we don't surround ourselves with it and we don't think about it. But if you think about deals, you think about real estate, something's going to pop up. An opportunity will pop up, and you will be ready because you've been in calls like this and you've paid for mentorships and courses and all the time that those are all actions. And
Mhm.
it's just action with a little bit of patience. It's going to help you find the right opportunity. So I don't know if that answers your question, Nick. I think it's just about the discipline and the thinking, because not everybody's in trouble. There's our investors are, most of the 90% of our deals are on fixed. We do have one that is not fixed, but our play on that is to do more of the capex work quickly and get out of that debt.
Okay, so that's good. Yeah, it's good for you with that
Mhm.
fixed. Are you saying that Arbor place was was that a life insurance? You mentioned Place Arbor.
No,
Is that life?
Arbor is a broker, a lender that basically goes and shops the loans for you, right? So like you can't just go to Freddie Mac or Fannie Mae to get a loan. You have to go through a lender. So Arbor is like a lender that
And
will
he places it.
pre-qualify you, do all the work, and then send your package over to the agency. And then they will
Okay.
fund. Yeah.
Okay.
And then
Yeah,
they
that
make
helped a
a
lot.
percentage in
Yeah.
between. Yeah. So yeah, thanks
All
for
right,
that.
Alex. All right, thanks.
Yep. Barbara.
Hey, Alex, can you hear me?
Yeah, I can hear you.
Okay, great. I just pulled over. I was driving. Thank you so much. So, I'm part of Cardone's Real Estate Club, and I'm to multifamily. So, my question is, I keep underwriting deals, 50 units and over, and talking to brokers, and they're just not working out.
Mhm.
And you're talking about patience. Should I be patient waiting for 50, 60, 80 units and over, or should I start looking at something smaller so I now have some experience?
Yeah.
I'm trying to figure out how I do this to build some credibility, but yet not buy at the wrong price.
Yeah. So let's start with buying at the wrong price first. Okay. 10 years down the road, there will not be any deals that we're buying at a wrong price when you look back 10 years from now. Anything that you buy, you're going to be like, man, that was a great price. Okay, so that's the first thing to really look at it. Again, that's to look at deals from a long, like down the road, looking back. You're projecting everything far. Like that's what Grant Cardone's doing. He's like, tell me in 10 years I overpaid. He will overpay for the best location, for the best properties. He will. But 10 years down the road, those are still going to be properties that's going to make a whole ton of money. They can't be replaced. So location is one. Now, two, if you were to find a good deal, let's say you're looking at 50, 60 units and you found one that worked. Now what? What's next for you?
So now I have to go find my investors for, I'm going to say the 40% at this point.
You're gonna find the investors for the deal. So like, but I'm saying
I'm figuring it's a 60% funding at this point, 60% LTV.
Okay.
So now I've got to go find, say it's a whatever, $15 million deal. I have to go then bring that deal to people who are looking for investment.
And then, so let's say you found the people, you found 40% of the money. How do you get this deal closed? It's $15
I'm
million.
sorry, I don't think I completely understand the question.
So can you sign on to this loan?
I can't. No. I absolutely need a sponsor because I haven't done it. And that's why I'm wondering, should I be buying these 20 units and 30 units so that maybe I can sign on to it?
Yeah, so really the answer is you need to have more people on your team. You want to have that scoped out already. Like let me talk to a couple sponsors, right? Who are my sponsors? Who are people that are doing deals? And then you're going to say, what type of deals are you looking at? What market do you guys like to look at? What's the IRR? What's the cash on cash? What's the value add play? Okay, so you understand between the different sponsors, oh, okay, so this is what they want. If I find a deal, I can bring it to this sponsor and the sponsor can hold my hand through the whole deal. Right, so the sponsor can help you with the LOI, the sponsor can help you with the due diligence period, the sponsor can help you with resources for the appraisal, for inspections, for all this stuff. Otherwise, you're going to be leading, you're kind of leading your investors down a path that you've never gone before, right? So that's why you want to find, it's important that you're working all the things together. You're building the relationship with the brokers, you're building the relationship with anybody that can help you through a deal. That's the most important, because if you found a great deal, it does not mean you can close this deal or get this deal under contract. Right? Because
no, absolutely.
yeah. So there's multiple
No,
things.
like I know a broker who would not sell to me. I
Yeah.
could have the best LOI, and he has his group of people.
Yeah.
So I just avoid his deals when they come in because I know he's not going to sell to me.
Yeah, but like probably all the brokers are going to say the same thing. You know, that's the thing. Like they're going to ask you, okay, well, do you have proof of funds? Well, if you don't have proof of funds, you're syndicating the deal. What type of track record do you have? Oh, I don't have any. So there's so many things. And nice, Peter's here. Peter is a great resource for how to speak to broker and everything. So if you want to add anything, Peter, feel free to chime in. But
I'm so depressed. It's just so depressing.
don't be, it's good. Like
Yeah.
where you're challenged right now and you're getting these like nuggets of like, oh, this is what I get to do next. Like that's not a depressing thing. You're finding the answers to what you need to make a deal happen. Otherwise, you're just going to underwrite deals all day. Right? But you're like, okay, now I need this person, and then I need this person, and then I need this. They're all things to bring you towards that first deal. That's an exciting thing. That's not a depressing thing. You want to change that. You want to frame that a little bit different as well. Like, okay, now I just get to meet more people. It's not boring anymore. It's not just the underwriting and the brokers that I'm talking to. I get to find a team to play with. I get to find a sponsor to sign on the loans, and that's going to help you tremendously and shorten that time frame for you getting into a deal. Otherwise, you're going to just be like, oh, well, if I go smaller and smaller and smaller, and you're going to end up buying like a 10-unit deal. And they're not that fun.
Yeah, that's kind of where I am. I'm like, should I just in this market, and when I underwrite the smallers, I'm like, this doesn't make sense.
Yeah.
The largers make sense if they're at the right price. But it's sort of this, as you're relaying, it's a vicious circle.
Yeah. And we'll talk about the smaller versus bigger in a second too. But Peter, go ahead. Welcome.
Yeah, well, Alex, it's great to see you. I hate that I wasn't able to engage last night. My two daughters wanted to play a game, and that just, one of them is 19 years old. That just doesn't happen. So as much as I wanted to hang out with you, my daughters won last night. So, but
I completely understand.
yeah, no, I appreciate you calling me out here. I do have some thoughts on a couple of things you've said, but yeah, and I agree with you completely there, right? You got to reframe the way you're thinking about it. That's not depressing at all, right? You're in the knowledge, you're in the learning phase. You're gathering knowledge. We all have a lot to learn, but we have these amazing communities to support us. And Alex is an incredible leader. Hang out here. You're going to build your team in this room. There's 63 people on here. I guarantee you, within this room, you can build a team to do deals. What really struck a chord with me, though, is I was on an all-day event on Friday. And the guy who led that event was really teaching us to go direct to seller. And I think that is a critical skill to learn right now in this phase of the market. The deals you get from brokers right now, it's almost certain they're not going to be deals. I'm not saying they're definitely not going to be deals, but about the only way I could conceive of you getting a deal from a broker is if you already have a close relationship with them and you're their first call. because you're competing with all of the other buyers that have already closed deals with that broker, and for the off-market deals, and they're going to get them before you. So more than likely, you're going to have to find these deals off-market, direct to seller. Now, that said, we still want to be reaching out to brokers, right? We're going to need those relationships probably for the deal we find from a seller, number one. Number two, a year from now, 2 years from now, 3 years from now, we're going to need those broker relationships. So I understand the frustration, and believe me, I've wanted to quit multiple times, but now that I've stepped up as a leader in this community, I can't quit. And that's what you have to do. You have to come to these meetings. You have to raise your hand. You have to ask questions. You have to get known, because if nobody knows you, it's really easy to quit and slink off into the sunset and go work your W-2 and give up on that dream and not become a legend and stop chasing freedom. But once you get known and people are following you, you can't quit. You think Alex is going to go away tomorrow? Not a chance. There's too many people that need him. And when you step up as a leader, now you start to develop a purpose, and you have people that need you and that are counting on you. And I'm blown away when I come to this meeting tonight, all the people I see who I've already been on a Zoom with today, and how many of these people that I've seen countless times in other rooms, because they won't give up. They're here chasing the dream. Some of them are already have many, many doors. Some of them have 0 doors like me. I've been involved in probably more than 150 transactions over the last 20 years. I sold all my rental property in 2016. What an idiot I am. I'm still learning, right? That was, in hindsight, was the stupidest thing I could do. But at the time, it seemed like a pretty good idea.
Yeah.
We had been running this market for so long. So anyway, I'll stop there. I don't want to hijack the meeting here, but the only other thing I do want to mention, Alex, I agree with you 100%. 10 years from now, everything we buy is going to be a good buy. However, Grant Cardone can afford to overpay. I really can't afford to overpay on my first deal unless I have unbelievably amazing terms with, a long, long horizon on the debt. You can't put yourself in a situation where you're potentially over leveraged and you have to sell or refi to get your investors out, because you may not have that option. Yeah. So you got to be careful on that. Can you overpay today? Yes. Can you overpay today when you have massive cash flow from somewhere else to bail you out? Yes. But for you, me, and the average guy, we've got to buy right. We got to be careful. We got to be super conservative. We got to buy right. That's my humble opinion.
Yeah. There are a couple of things that you don't give up. Okay. You don't give up the location, and you don't give up the cash flow. If you got the location and the cash flow and your debt is fixed, day one that you're going to positively cash flow, then it's going to be good. It's a safe bet, right? Like, you have investors' money, you got to be responsible with other people's money. It's more important than your own money. Like, I'm a little riskier with my own money. I'm like building houses in North Carolina, and those are like, pretty risky plays. And I have investors that have that appetite as well. They want the possible 100% returns in 1 year. I'm like, okay, well, let's go and do this. But most of my investors will go into safe multifamily plays. We're going to get you the 2x in 5 years. There's going to be cash flow. Like, it's safe place. Like, people that say real estate is not safe is because they're looking at the quick flips, those types of things. Like, if you go with cash flow, and I'll talk about this for a second, and then I'll get to you, Natalie. There are 2 things you want to look at in real estate when you start to strategize your portfolio, your asset. One is the cash flow. Okay. The other one is your net worth, is the equity bump. Okay. Because you can get 10, 15% cash flow, And you can buy it in a neighborhood that's not growing at all. And it's like, awesome, it's 15% cash on cash, but that's all it is. In 5 years, you know, that's a what, 75% return on your money. Okay, cool. And then you have deals that are in great locations doing 6% cash returns. And then in 5 years is doing like 150% returns, right? Like double the returns in that time. You have to balance those two things out because cash flow is going to give you financial freedom through passive cash flow. Also, you want to build up your net worth. Your net worth is built on the equity in the deal. All right, people that have a lot of cash, like put it into deals and let your net worth grow and catch some of the cash flow. Now, cash flow is calculated if you put $1 million into a deal, into real estate, and it gives you 10% returns, that means you're going to get 100,000 a year on your cash on cash. If it's 6%, then you're getting 60K a year. Those are, you got to decide the 10% cash on cash is probably not going to be in a better location than the 6% cash on cash. Okay, if you have the same operator looking at two deals. Now, if you're overpaying, that's a different conversation. But the 6%, the lower the cash on cash, usually is due to the fact that you have to pay a little more per door because it's a better location. It's got better schools around it. It's got a higher upside. Nobody's selling it at 100K a door. They're selling at 150K a door. So your cash flow will be smaller, but the location, it's going to have a bigger bump than the one that is in a less desirable neighborhood. So you want to balance those things out. Like, what's my cash flow? And then what's my equity play? Not every deal is cash flow, because we can go get a deal right now with a 20% cash on cash. And I guarantee you, nobody's going to buy that deal from you because it's probably in such a risky D-class neighborhood to get that. Okay. And I don't care if anybody says they're giving you 20%, 15% cash on a real estate property, unless they're doing short-term rentals, you know, that is on a big multifamily project, that is going to be in a worse neighborhood. So go ahead, Natalie.
Hey,
Hey.
hi Alex, and everyone. To your point about short-term rentals, right? So I've been learning about, I've been in the multi-family learning space for about a year, and actively attending Zooms, and I'm a part of Vina Jetty's group. So I've been, putting in the work. In the meantime, I wrote out a strategy for midterm rentals, right? So I figured, it supports with getting started, right? And also being able to bring in some capital, right? A bit sooner than being in the large multifamily space. So I'm just curious to know, what are your thoughts about the midterm rentals, the strategy I just shared with you, and anything else you have to share around that?
Yeah, so it's a good point because I have an Airbnb midterm rental business that was on the side that brought in about $20,000 a month. I didn't have pressure doing multifamily. Okay, this is something that I'm gonna put out there right now. If you're going into multifamily, don't expect to make any real money the first or the second year. You'll get some acquisition fee, but those returns, you're splitting with a lot of people. You may get a couple $100 a month, something like that. It's not a game changer because nobody's going to pick you as a general partner on $100 million deal. Now, when you go do the $100 million deal, yeah, you can probably retire and not do your other stuff if you can participate in these big deals. But in the beginning, you got to go through the fire. You got to go through the $5 million deal, even the $2 million deals, and getting together, building up, planting seeds to all the people in your life that this is what you're getting into.
Mhm.
You can raise a little bit of capital and make a difference on a team. If you can only raise like $100,000, $200,000, That's not going to make any difference in a $50 million deal.
Okay.
Right. So you're not going to participate in any GP positions, but if it's a $1 million deal and you bring 200,000, you can get some of that, but that's not going to give you the freedom that you're looking for. So yes, I had a business on the side. So I was able to fly through all the different multifamily deals without the like, hey, what's my compensation? Hey, what's this? What's that? I'm just like, okay, let's get it done. You know, I want the experience. I don't care if I take less because I'm obviously newer. So cool, you guys take more. You know, I'll raise the capital. I learned how to do that. And then I was able to create a portfolio of multifamily, a lot of doors. And now everyone's like, oh, when I think about multifamily, I think about Alex, because I also leverage and tell my message on social media all the time.
Mhm.
You know, like I put myself in this like uncomfortable place where I force myself to have to do things every day. Right? Like the social media is like, okay, make a video every day. Do you have a video today? Do I make a bunch of videos today? There's things that I have to do to keep myself pushing forward because I've started down the hill. Like I can't just stop now. Right. But I've chosen that this is the path I'm going to take. And without my short-term rentals and midterm rentals and how much returns I've generated my investors during that time, I was able to pivot people into multifamily really quickly. And now I'm starting to get to a point where I don't, the short-term rentals and the midterm rentals are kind of getting in the way of my time now. All right. So like you will grow out of these things. We have a 30-unit deal going on right now in Las Vegas that we're going to turn majority of that into midterm rentals as well, just because it's in a really sick location. It's got a small cash flow going in and we can bring it up to 6, 7, 8% cash on cash, but we can also do midterm rentals on those and give our investors even more cash while we wait for this area that's going to explode. It's in a sick location. And we're giving that opportunity to our investors to do midterm rentals. Anybody that's invested $100,000 into the deal gets 1 unit as an Airbnb arbitrage. Like it came to me recently, but it's a genius play because we get to increase the rents for our investors, right? Including this person that invests 100K, and you get a unit that you can make an extra up to $900 a month. That's huge. You know, you can have a 12, 13% cash on cash on that deal, but you got to do some of the work. And since I have a short-term rental management company, you can pay me 15% to run it for you.
Nice.
So now I can keep my management company alive, going. I have, 12 employees basically working for us there. So, all right, now I can keep that going. Right. So midterm rentals, I think it is a great way to carry the property forward a couple years, 5 years, 10 years, so that you get good cash flow and that equity bump is going to be great. Like your midterm rental, whatever you get should be in a really good location. Now, in the beginning, if you don't have a lot of money and you want to do let me rent it and then re-rent it, it's a lot of work still. Okay. It's a lot of work, but it can make you good money. It can get you started. It can get you excited about real estate, which everything is about excitement. Can you go and do all these boring things every single day, underwriting deal after deal after deal and keeping your excitement, keeping that enthusiasm? That's what's going to make the difference between you being able to do these deals or quitting. Because the W-2 path, that's the easy path. That's I mean, no knock to anybody that's doing W-2, but it's the lazy path to financial freedom. And it's a path that if you don't invest and do something outside, you will never find financial freedom. You do the W-2, but learn to invest your money while you're doing your W-2. Start to have your investments pay you more than your W-2 pays you. Then you can choose to do your job. Like I was with a really good friend. He owns a bunch of hotels. His wife makes $400,000 a year. And he's like, man, you don't have to work, but they are just in such a good financial place that the reason why she's making 400K is because she doesn't have to work. She can decide what she wants to do. Nobody tells her what to do or what she can't do because she's already financially free. But most people are binded by, oh man, if I talk back to my boss or if I don't take it, I might lose my job, right? There's like this, like that desperation part of it that keeps us smaller. Yeah.
No, for sure. I actually just quit my job 3 weeks ago, a month ago to the
Yeah.
day. That's funny.
Okay. Well, what are you
Um,
doing now?
Focusing on the real estate and, focusing on real estate, learning, like I said, and I've built out this strategy after doing some research, around the midterm rentals. I wrote out a strategy, and leveraging. So I used to do, for 20 years, I've done resource development and fundraising. So it's like, okay, how can I leverage these skills to acquire, so I can get what it is that I want, right? And so that's where I'm at with it. So I've done it before. Every time I bet on myself, it looks scary, but I come out winning. So this is like, I'm playing a really big game right now. So that's what I'm doing for now, is focusing on this. And yeah, I don't want to monopolize the conversation. I do have some follow-up questions, if that's fine, or we can get back to me
Sure.
later.
There's just one person behind you, so go ahead.
Okay, cool. So thank you for that. So you mentioned something about arbitrage, right? And that was one of the questions I had, right? Arbitrage versus ownership, at least in the beginning. So my mind, just to let you know, my mindset is I don't mind stretching, right? And like being scared to do something. I also want to be realistic at the same time. So that sweet spot, right? So what do you suggest, what does that look like to you? And maybe like in terms of, and I know there's a bunch of factors that you have to consider, but also like what's a minimum amount, generally a minimum amount of doors that you would suggest that winds up kind of paying for itself.
You're talking about
And-
arbitrage or you're talking about multifamily?
Well, for the midterm rental space.
Yeah, I mean, you can do really well. Like, I'll tell you right now, we have one property that we took off short-term rental because it's just too much work, and we started to do midterm on it. We got an insurance company to put somebody in there. The property is making about $11,000 a month doing the short term. Okay, with all the expenses and everything, maybe with all the expenses, not including mortgage, probably somewhere around $7,000. Okay, that we would make on that property. And then I split it with our investor. Okay, now we got this long-term or midterm person coming in, and they want 4 months, and they're paying us $6,000 and change a month. And I'm like, okay, well, I don't have to worry, do anything, message people. It's just 6,000 something a month without doing anything. Right. And I'm like, great, even though we make a little bit less, but it's much less work, much less headache. My team can be open to do other things instead of going in there constantly doing the flips. So that property we've already refied out of that property twice as well. So it's pretty insane.
Wow.
Now, you don't want to look at multifamily deals like you look at this one house. So this is midterm rentals. So it's doing well. I mean, our mortgage is like close to $3,000 with taxes and everything. And on a midterm, it does 6,000 something. That's $3,000 net. You do 10 of those, that's $30,000. All right. I think people can handle up to 10. If once you get to 10, you'll start to see like that's a weird magical number that it just starts to get overwhelming. Even mortgage, even lenders don't give you 10 properties that you can put under your name. So there's like there's signs also. There's signs that show us where we should go, what we should do. Like no more than 10 single families, no more than 10 residential properties. right? Because and then when you look at taxes always point us to doing real estate. Everybody should be figuring out, how do I start to become a real estate professional? Like, that's everyone. I don't care if you have a W-2 or not. Start to figure out how you can become a real estate professional. That is one of the only ways that you can pay no taxes. Like, from any income that you make, you can pay no taxes because you're a real estate professional. That means everybody should be figuring out that the first step to financial freedom is to think, how can I start to become a real estate professional? And that's my opinion. Don't, I guess take it with a grain of salt, everything that I say anyways, anything that anybody says, right? Like, contemplate on it, do some critical thinking. So that's an example of midterm rental that we've got going. Okay, that's one property. We have one big property that generates almost 20K a month on its own. And we're definitely not doing midterm on that, because I don't know who's going to come in and rent it for 10. I don't think insurance going to put somebody in a property for 10K, 12, 15K a month. Right. So we're still running that as a short term. Yeah, but it's a lot of work,
Yeah, sounds like it. So you think starting off with one property, because I was thinking when I said, I was thinking, well, okay, maybe I could start off with one, or maybe get like a quad or something, or whatever, right? I don't know what it looks like. I'm open to whatever makes the most sense. But I don't know if that's even, if people even do that, they have a complex and all of them.
Just know that this strategy is still like short-term thinking. Like, don't let this be your strategy to create financial freedom. It's your strategy to increase what we call in Legends quadrant 1, which is your active income. Even as a general partner, you're only increasing your active income. Okay, so being a general partner is not easy for everyone that is like wanting to step into the next level of multifamily and be a general partner. It is not easy, especially if you're leading a deal. Like, the level of stress that starts to show up is sometimes you may want to be like, let's just stop doing this, right? I mean, it's a hard game. So you want to be around people that have gone through it and have the strong mental fortitude, because deals are stressful. When you're putting deals together, it's fun when it happens, but it's not fun when you hit some challenges, because there's so many people involved, right? So, like, being a general partner, you want to, before you just jump onto any team, like, talk to some people, don't just jump on the first opportunity. Somebody's like, hey, you capital raise and you can jump on the GP team. Like, it's the worst thing is to get into a deal and be on a team that you're not happy to be there. Okay. Like, other people are going to suffer because you are having a bad relationship with other GPs. Investors will suffer. The overall energy. I'm a big, like, energetic person. It needs to have good vibes in the deal and feel it out. What I would do for you is I would get really good at doing one midterm rental, and then I would raise capital around the next couple ones, and pitch it like, this is just to increase your active income. If you want to create financial freedom and generational wealth, we have to invest money back into a real estate deal. Because those things, flipping houses, short-term rentals, midterm rentals, all of that stuff is like, that's to generate your active income. That's not to generate the passive income.
Yeah.
You got to invest it for the long-term game.
I appreciate you saying that. Thank you so much. Because it doesn't matter that, and I don't need to be right about it. I just appreciate what you shared, period. And it's confirmation, because that's part of my strategy. Get the active income coming in, get the, the experience, and, be an accredited investor, get some money going there for the long game, and then eventually be a GP, right? Like, I don't have to jump out the window right away, right? But definitely.
Well, eventually you want to be an LP.
Yeah.
That's the game. Eventually you want to be a passive GP or an LP. Like, passive GP, a lot of people are like, what's that? that means you're not operating the deal. You've gotten a roll on there. You've gotten extra percentages from your investments. To invest in the deal as a GP gives you triple dip. Okay, so if you put the money up for risk, let's say we put $100,000 up and you put it in a risk capital, you get risk capital percentage. Then you get $100,000 towards credit towards you for raising the capital, even though it's your own. And then it drops into the LP side of it, and you get the LP returns, which is triple dipping on a deal. You know, so it is great. Now, if you don't have to be on the asset management side, now you're a passive GP. So what I teach our group is, how do we start to get to a point where we use our net worth and our experience to help people put deals together? Like you gotta, that's why we mentor our groups, people that are in our group, like we learn how to run a deal. Because eventually I don't want to run any deals. I want to invest with my mentees, knowing that they know how to run a deal. They think like I think, and I want my money with them, and I want to sign on the loan so I can help them make the deals happen. And everybody should be climbing the ladder in that direction, knowing that that's the goal, is to be an LP and a passive GP. That you're not on any calls with management companies. Your asset managers are doing that, right? So like, you know, the end goal is not to be a GP. The end goal is to be an LP and a passive GP. So we can talk more about that another time. But before I get to you, Louis, let me answer Hector's question. A mentor mentioned, don't quit your W-2 till you replace the income with, replace your income with your business. Any thoughts? It's a safe play, right? So 90% of the times, that is a good advice. The 10% I would say is, if your W-2 job is holding you back so much that you know in your heart that it's time to let it go. Because sometimes the reason why you can't move forward is because you have a W-2 job. And I was telling somebody today, they're like, oh man, like we got this property that we were flipping, and it's a historical property, and the contractor painted the exterior, and now we're getting like a fine. We have to undo the paint, we have to repaint, you know, go through a whole bunch of things with the city, and found out a whole bunch of other stuff is wrong. And if they were to sell that house now, they would sell it less than what they bought it at after putting $100,000 into it. So they will lose 100K on this flip. And in order to get this back up and going, they would have to pay another 80K to get this deal going. And when they put this deal in the long-term rental, they would be negative $600 a month cash flowing every month. It's a very, very stressful situation to be in. Like, are you just going to take this loss? But 90% of the times, I would say, try to salvage this deal what you can, so you take a less of a loss. It may take 2 years, 3 years. Now, the 10% of the time is that if you have this deal and you're stressing about it and it's sucking your energy away, in those 3 years, your relationships are going to suffer. Your ability to see other opportunities will suffer. So that 10%, that's going to be up to you of what you're going to make it, right? Like, I can chalk up a loss. When I lost everything, when I finally gave up on my restaurant, I took a $400,000 loss. I could have kept it going and get the things up a little more and then sell it and recoup a little more. But I couldn't do it anymore. The energy, it was killing me. And, you know, my relationship was suffering, you know, all sorts of crazy stuff was suffering. And I just wasn't going to do it anymore. And letting that go gives you, you know, a new opening, new space, even though you chalked it up for a loss. You just got to attach that loss to a higher purpose. And then that loss will be, it's fine. You know, like when I finally got over my restaurant, losing in my restaurant, it was because I now had a purpose. I can use that story to connect with people who are rock bottom somewhere. So now that's attached to a higher purpose, and it's all good. I'm glad I left it, you know, where I left it. So yeah, I would say 90% of the times, yes, hold on to your W-2 job. You know, don't put yourself, you know, in the deep end when you don't know how to swim. But if you trust yourself to swim in the deep end, then do what you're gonna do, you know? All right. Luis, what's up?
Yes, thank you. This is a question that varies from different people. And let's say you have a deal, you have all you need, you already confirmed the taxes, you already know the rule, you already got your loan size, you got everything, but you're only missing the property management. Do you get, for you to send the LOI, do you wait to get the blessing of your business plan from the property manager? Or you send the LOI and then you continue finding the property manager to give you the bless?
I mean, ideally, you would want to have talked to a management company and got a blessing already. You know, like ideally, the process looks like you talk to a broker, then you ask the broker to refer you to a property management company, then you talk to the management company, then you get a referral to another broker, and you just find out as much as you can about the area and what's coming, right? You gather all that information, and then you go in, and then you find a deal. But if the deal hits and you don't have a property manager yet, then I would still submit the LOI, you know, if you feel strong about it, because you do have there's a period of time that you do some due diligence and you can get out of the deal, no problem. All right, so if you think it's a great deal, get control of the deal and just let it run from there. You know, you might have to put up some EMD money, but EMD money you can always get back if you get out in the right time. You know, you don't use all that time. So don't be afraid of LOIs and getting deals under contract.
Yeah, thank you. No, we do it all the time.
Yeah.
LOI doesn't mean anything.
LOIs all the time.
Doesn't mean anything anyway.
Yeah. Now, I would say if you're trying to build a good relationship with a broker, don't just have them submit LOIs and do all this work for you without any real intention of doing anything. Really prepare yourself to go through with the deal. You know, there's a lot of people just submitting LOIs and they have no idea what they're going to do next after the LOI. That's like wasting people's time. You don't want to do that, right? Like you don't want to be wasting anybody's time. Make it real. Like get yourself into a position that you're doing it for real.
Yeah,
Like,
that's
I
what
know
I say.
a lot of people just practicing, just submitting LOIs and then leaving them hanging.
Yeah, sometimes when you go to a certain area but you don't find the right property manager, you have everything already. I mean, we even call the tax assessor and we ask for the formula and we go over the formula. Where do you get this from? Even I go through that. The insurance, we get a couple of insurance. After you get all that, but sometimes property managers certain areas, kind of difficult to get the right, because if you're looking for property close to 100 units, you don't want a property manager that manage only 30, 40 units. So you have to, and sometimes when you go in the 80, 70, you're in between the large companies and the small companies. So those are very difficult to find property managers. That's the reason why. Well, thank you.
Yeah. So what I would do for anybody that's starting, and this is a great advice that Robert Martinez shared with me, is if you're going smaller, 30 units, 60 units, 70 units, like we have our business plan for our 30 unit. Like I'm buying it because it's in an unmatched location. Like I'm like, this is, you know, they're not going to be selling at this price and it's never going to be at this price ever again. So I'm buying it regardless if it's 30 units. And he was like, listen, you want to get a property management company that you're going to tell them up front that you're going to be an active owner operator. Right, that they're going to let you walk all over them. It's not going to be one of these big management companies that will tell you what to do, which you want on a bigger deal because they have the experience and they already are doing it. Let them do their job, you know, keep an eye on them. But on the smaller deal, you're going to need to find the property management company that you can just be like, walk all over them. You know, and they're going to have to be like, yeah, we're okay with you being, you know, active. Define that further. Get yourself into position of submitting an LOI. Yes, so you want to have a team ready. Like if the LOI gets accepted and the contract's coming down, you're not going to say, oh crap, who's gonna put the money up? Like, how much money do we need to put up? Like, when you submit the LOI, have the next couple steps like ready. Who's gonna tell us what's the next steps of due diligence? Right? Like, do we have a due diligence plan? Like, I don't even know. Am I just gonna be kind of like trying to figure it out as I go? Or can I bring somebody in place already? When I submit the LOI, this is why, Barbara, we were saying that it's about getting your team in place. You want to have, who's going to sign on to the loan? Who's going to put up the LOI? I mean, the EMD? Who's going to put up the other risk money for inspections? Because when you start to go down the inspection road, that money's not coming back. You get an appraisal, you get an inspection, regardless if you pull your EMD out, that money's not coming back. All right, environmental, there's other things that you got to look at. And an inspection for a building, a multifamily building, set aside like 15K to do that. Once you activate the attorney to start drawing up paperwork, that's money not coming back. Get ready for another 12 to 15K. So that's what I'm saying when I'm saying, get yourself into a position that when you're submitting an LOI, all those things are thought out already. You're not like, oh, I'm submitting an LOI for fun just to see if they're going to accept it, where they're at. Like that's wasting their time and your time. So I would say not do that. Yeah. So I hope that supports. Yeah, I really, really wanted to just have one call with no guest speakers where we're actually focused on like interacting and just sharing my experience as well. You know, sometimes I feel like I'm as good of a guest speaker as the guest speakers that I bring on. And I get to share some of my knowledge as well as we go. Because I can definitely share about social media. You know, I've raised $1.2 million on Instagram. Okay, so that's a whole nother game.
Please tell us how.
Yeah, so and it's not just new people. It's like when I put this out there and I'm in somebody's face every day, when you are asking for people to invest with you, when you're raising capital, it's never really about the deal. It's about how much they trust you. And it's the same thing on social media. They see you 7 to 10 times, they're going to start in their head think you're an expert. All right, Brandy, you're awesome. And they're going to trust you. There's people that tell me, oh my God, your videos are awesome. Never even watched one of my videos. They're like, every time I think about multifamily, I think about you. Maybe they watched one video, but they saw my face 10 times in a row, 10 days in a row. If people follow me on Instagram, like I am for sure going to be one of the top videos that you're going to see when you open up your Instagram. It's because I'm so consistent for a whole year, and Instagram has been like, all right, we deem you, Alex, as somebody that we can trust that's going to be doing content. And then I'm also pushing myself more and more and more. Build up my followings. 50,000 DMs go out a month to Grant Cardone's followers and people that Grant Cardone follows. 50,000 emails go out to, other influencers, the people that they follow and that follows them. That's not cheap. But I know that I want more people seeing it. And friends from my past, tons of people, my friends, that are like, oh my God, I've been thinking about investing. And I just went through like 2 hours of watching your videos. That is, when somebody watches your videos for 2 hours, they are ready to invest with you afterwards. Like if you are that interesting, right, about a topic. So multiple friends from my past invested into my deals. New people that have joined this call as well from my social media have invested. So between that, like, and I haven't even done a 506c on social media yet. Okay, our next deal, I am going to blow it up on my social media. I'm gonna inject so much money into ads for the deal. It's gonna be a 506c. It's gonna be supercars, exotic cars, and the exotic car warehouse space that holds it too. So we're gonna raise for the warehouse and we're gonna raise for the cars. And we're gonna, even when we're done raising, I'm gonna keep that ad going just to keep the list growing. So I'm sharing with you guys like my game plan moving forward. And those of you guys that are on this call will see that game plan playing out in the next couple months. And you get to see if it's successful. How successful is it? Like it's no accident where I'm gonna go because of the game plan that I'm following. And it's because I'm surrounding myself with people that have done it. And if you guys can pick my brains and raise your hand and talk to me here, you're basically through extension talking to some of the biggest guys out there that are doing it, how they're doing it. Like I'm a mastermind like junkie. I paid $165,000 last year to learn. This year, it's not about learning anymore. This year is about creating systems for me. And it's about how do I bring value to everybody that's in my own personal mastermind now. All right. So we have like Robert Martinez coming once a month to our Legends group to teach us. We have personal development trainers coming in once a month. You know, I think about it now in this way, like, okay, I've learned it. How do I continue to be an example and bring tons of value to the group? And as a team, if we find one deal, one great deal out of every 100 deals we look at, and we can only look at 3 deals a day, like really analyze 3 deals a day, it's going to take you over 3 months to find your great deal. But if we have 100 people looking in the group, that means it's a possibility that we find one great deal per day. You take that and you compound that over 1 year, it's an insane missed out opportunity when you're doing it without a team. Okay, if you compound that over 5 years, it's probably a difference of $100 million at least in opportunities. All right, so just, you know, you want to find your team, you want to find your tribe and start to play, start to get into the game. Who can walk me through deals? You know, who do I want to be around? Who do I know that's on the crazy come up that I want to attach myself to? Not somebody that's too far ahead. If you try to attach yourself to Grant Cardone, you're going to need to put at least $5 million on the table just to get his attention. What deals should we bring to you? So, you know, I get excited about certain things. Like I don't just invest in deals and do deals because it makes money. Las Vegas, the reason why we're doing it there is because I'm a huge, anybody that is mastering art, like when you have a craft that you are mastering, I want to be around you. Vegas is full of people, Cirque du Soleil, everyone mastering their craft. There's an energy there that is about mastery. All the other stuff, the partying and the drinking and the gambling, that's all the noise. Big money is going into Vegas, okay? Going into experiences, art. I follow art wherever there's art. Okay, that's one thing that I love. I want to be a part of bringing my passion and my skills and my gifts to an area like that to grow it. So that's why I'm in Vegas. Now, I was sharing on yesterday's call, I'm doing this exotic car business. A, because it's fun, like all guys like cars, right? I mean, kind of, I think, like they're like cool toys. 2, I'm passionate about mentoring teens and I'm passionate about networking. I want to have a networking event where influencers and business people want to go to it. And there's nice cars around, nice Lambos and Ferraris and Rolls Royces around. And then we have a meetup at that place. Okay. Chances are higher caliber people will be there. Higher caliber people will be renting those cars and wanting to invest back into our vision. The second thing, I'm working with troubled teens in Las Vegas. I was like, give me your most troubled teen. Now, if I bring this troubled teen to our business and show him Lambos and nice apartments and Ferraris and Rolls Royces, do you think now I will have the attention of this troubled teen? And can I now have great influence over him? You know, so like, or her, whatever. But those are my passions, you know, those are my passions, and I invest that way. If you can show me a deal, like, why would you want to be in this deal? That's the way to get my attention. It's not the numbers. We can all find 2x, 17 IRR, whatever, 6% cash on cash deals. But why? Why do you believe in this area? Why do you believe in this property? That's just me. Yeah, John, we have multiple deals that we're looking at. Going to Fun Lunch Live in Miami. They do supercar events with their, yeah, awesome. You know, I have a friend that I met, and the idea came because I met somebody at Grant Cardone's event that has 60 supercars in Miami. I like it. And I'm like, hey, let's partner up in it. Yeah, Ian's going there. I'll probably go there too. So other questions. We'll take 3 more minutes for thoughts and questions, and then we'll do a breakout room. You'll be broken out into random smaller rooms where you get to share and talk and network with people. Okay. It's, you know, a lot of people leave. We did about 20%. 20% of the people leave when we start breaking out into breakout rooms. Like, this is your opportunity. If you spent an hour and 17 minutes here on this call already, meet somebody that you're supposed to meet. You know, meet somebody new. Any other last thoughts before we break you guys out into breakout rooms? You know, talk about your goals. Talk about where you live. Talk about what your skills are. What do you think your gifts are? What do you need? What is it that you need? What are you looking for? And what can you offer?
Yeah, Alex, I just want to say that that's awesome. I haven't heard about that vision yet with the troubled teens. I was literally just talking about this with one of my investors. He was saying how, like, you know, all the kids in these areas, he's very familiar with the Atlanta area. They see all the, you know, the nice cars and the gold chains and everything that they want in life, but they're very lost on how to get it. And what you do so well is you basically grasp all of that, for lack of a better term, gratitude training mentality, to where you can actually show these teens, no, it's be do have. Like, your attitude plus, you know, your action is going to equal your achievements in life. And most, you know, children, teenagers don't understand that. They see what people have and they immediately want to get all of the cars and the money and the houses. But what you do so well is you have the mapping and you show people that it actually starts within themselves and their attitude towards everything. So I just think that's so great, man. So thank you for all you do.
Yeah, thank you. Your mindset is, I mean, your income and the amount of money you can generate is not going to far outpace your personal development, your mindset. That's one of my favorite quotes of all time. That's why investing in yourself is always the best investment. Nobody can take that away from you. Somebody just had their other hand up. The other hand. Anyways. Okay, so let's do a breakout room. Nick, can you break people out? So just make it like 5 people per room, and we'll give you guys like 10 minutes. We'll give you a 1-minute heads up. Just break people out, 5 people in a room, and you know, about 10 rooms, because some people are about to drop out. They don't want to talk. Yeah.
Yep.
So
All right.
join the
They're
breakout
rolling.
room, guys. Making new connections, and then we'll be back to share a little bit.
Bye recording.
Bye recording.